They don't want to hear it, but we about to say it. Bernie on the mic, man, truth never faded. Wall Street cashing in, but
Why does the economy feel broken? They say inflation is cooling. The Fed says we're avoiding a crash. Politicians brag the economy is strong. But let me ask you, if that's true, why does your paycheck feel smaller? Why does your grocery bill look bigger? Why are you working harder, but falling further behind? This isn't your imagination. The economy might look fine on Wall Street, but on Main Street, it's broken. And today I'm going to show you why. The disconnect: empty storefronts, grocery checkout, stock market tickers. Here's the disconnect. Politicians love to point to GDP growth or the stock market as proof that everything's great. But GDP isn't your rent. The stock market isn't your credit card bill. While Wall Street soared in 2024, households sank into record debt. Credit card balances hit 1.3 trillion. Auto loan delinquencies are now higher than they were in the 2009 financial crisis. The average new car payment? Nearly $740 a month. So yes, the numbers look great for investors. But for families? This is the most expensive economy in modern memory. Why prices stay high host, on camera with graphics behind. Okay, so why aren't prices coming down? Supply chains are open. Gas isn't at $6 anymore. Shouldn't things get cheaper? Here's the truth. Once companies raise prices, they almost never lower them. Economists call it sticky pricing. I call it corporate greed. Think about it. Procter & Gamble, Gamble, Coca-Cola, Walmart. They raised prices during the pandemic because of costs. But when costs fell, prices stayed up. Why? Because you're already used to paying more. Overlay chart: corporate profits versus consumer inflation. Host leans in. And here's the kicker. Companies brag about this to shareholders. They call it pricing power. Translation: we can charge you more, and you'll still pay. Who the economy really serves: Wall Street, luxury offices, hedge funds. The truth is simple. The economy isn't built for you. It's built for shareholders. Every 3 months, Wall Street demands profits. Corporations deliver by raising prices, cutting jobs, or buying back their own stock to pump share prices higher. And who wins? Investors, hedge funds. The big three: BlackRock, Vanguard, State Street, who together control nearly $20 trillion. Who loses? You, the worker, the consumer, the person trying to build a life while playing in a game that was never designed for you to win. The real cost. Here's what it looks like in real life. Families cutting back on food because rent eats half their income. Rural towns losing jobs in construction and trucking while costs climb. Millions falling behind on payments, not by a few days, but by months. And while you're juggling bills, the Federal Reserve debates whether to cut rates, knowing it won't help for 6 to 12 months. That's why it feels broken. Because the system is working exactly as designed, to protect corporate profits first and people last. So next time you hear a politician or a Fed chair say, the economy is strong, remember this. They're not talking about your economy. they're talking about theirs. But who really owns this system that's squeezing you from every angle? Who's pulling the strings? That's what we'll uncover in episode 2. Who really owns America's companies?
We the people, and we want more.
Subscribe for episode 2, The Hidden Owners of Corporate America. Hit that like button.